Good morning everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin, Ethereum and XRP. They're all moving slowly sideways in really small ranges today, so I'm going to focus on Ethereum. I'm going to go through my full Elliott Wave count with all of the data, monthly, weekly and daily charts. Quick update for technicals for Bitcoin, it still might be forming a little flag pattern. I said yesterday, and I'll repeat again today, that you've got to be a bit patient with flags and pennants. You've got to be open-minded to adjusting the resistance and support lines as they unfold. The best performing flags and pennants complete within 15 sessions. So far, this one's only just been 6 sessions, so it could continue for another week or so and still be a valid flag. If I calculate the breakout point at 42,130.16, then a target from the flag from a downward breakout would be 34,530. Flags and pennants are always continuation patterns. They are not reversal patterns, and they're pretty reliable when they form correctly. So if it doesn't form correctly, if we get overshoots of resistance and support and it moves back in, then it's not a flag. So if it continues as a flag, this is the target. But I think the target is really too low. If price can break below 41,100, which is now really strong support, if it can manage that, I don't expect it to move below 38,500 because that is really strong support below. A technical principle is the more often support or resistance is tested and holds, the stronger it becomes. 41,100 has been tested now multiple times over months. This is very strong support. I don't expect a break much below this, if at all. We might see a wick down to 38,500 and a sharp V bottom. That's possible. Price is just moving sideways with weak and declining volume for Bitcoin. ADX is still declining, setting itself up for a fantastic signal in coming weeks. Get some free giveaways today to help you with your technical analysis. Click on the link below to go to my website and you can download one or more of these 3 giveaways. I have an ebook on technical analysis basics for you. These are the contents of the ebook, several chapters on some basics, some indicators, some techniques, looking at gaps, looking at scale for your charts, and I've even got 2 steps to a high probability trade set up there for you. Another free giveaway is this easy candlestick pattern guide to the major candlestick reversal patterns, bullish and bearish, diagrams, descriptions of how they should be read and in what context. And a third giveaway, I have this Elliott Wave structure guide, 3 pages giving you all of the Elliott Wave structures with all of the rules you need to know and diagrams of the ideal form for each. Motive structures on 1 page and all of the corrective structures on 2 pages. So click on the link below and get any one or all of these 3 giveaways for free. Moving on to Ethereum, this is what I'm going to focus on mostly today. The monthly chart shows the entire price history of Ethereum from back in its beginning in 2015. I am labeling from this low to this high a completed 5-wave impulse, and it has really good fit and really good proportion. Cycle wave 1 lasted 29 months. Cycle wave 2 lasted just short of a year, 11 months. This big bear market here is the first big year-long bear market, and so it absolutely makes sense in terms of proportion to see an impulse over here and a correction over down here. And so if this is cycle wave 1, it subdivides perfectly as an impulse. It's followed by a deep bear market, a 94% correction of 1. It doesn't look that deep because of the scale. This is a semi-log scale, but this is a 94% reduction in market value almost. And so then we get from there to here another 5-wave impulse with really good proportion. Looking at the proportion and alternation between the impulse of cycle wave 1, you've got a double zigzag for primary 2, a 73% correction of primary 1, a big bear market but not that long lasting, over in 6 months. And then you've got the sharpest part of primary wave 4, a 69% correction of primary 3, still relatively deep but not as deep as primary 2, kind of close-ish. Primary 4, a sideways regular contracting triangle. Primary 2, a deep sharp double zigzag. Beautiful alternation here. Good proportion. Primary 2 lasting 6 months and primary 4 lasting 5 months. So really nice proportion. Triangles are usually more time consuming than zigzags, but this one isn't. That's okay. They aren't always like that. And so there's beautiful proportion. This really does strongly look like a 5-wave impulse, and it's followed by the first time-consuming year-long bear market. So I'm really confident that up to this point, this Elliott wave count is by a huge degree the most likely structure. From this low to this high, there's another 5-wave impulse, beautiful proportion as well. Intermediate 2 lasted 8 months and it was a 96% correction of intermediate 1, a big bear market. Intermediate 4 only lasted 2 months. It's a 62% correction of intermediate 3, so not nearly as deep as intermediate 2, but still on the deep side. It's over 50%, so I class that as deep. It's a lot more brief though, and fourth waves for cryptocurrencies do have a tendency to be a lot more brief than their counterparts. Second waves, this is an absolutely normal look. Primary wave 1 lasted 34 months and primary wave 2 over in 6 months. So the proportion here is actually really, really good. Now you can't label this cycle wave 3 and 4 because cycle 4 may not move into cycle 1 price territory. An alternate way of labeling this would be A, B, C. A zigzag could be complete up here. That would be invalidated if we get a new all-time high above 4891.7, because if a zigzag is over here, then an impulse should be unfolding lower and Ethereum would be on its way to just disappearing. I don't think that wave count would be very likely at all, but if you want to be really bearish, that's a bearish alternate I could see. But this, I expect, has a much higher probability. I'm going to get into some reasons that I can see in here when we get to lower degree charts. And so I'm going to label this the end of cycle 2 and the start of cycle 3, which may only subdivide as an impulse, and that'll be labeled primary 1, 2, 3, 4, 5. Primary 1 and 2 are complete, primary 3 in its early stages. Now turning our attention to some of these ballpark figures of where it might go. I really don't like to call these numbers targets. I'm just making calculations for my own investing purposes because I bought a bunch of this about 4 years ago, and I'm expecting that. I just want to know where it might end, and I'm not using these as exit or profit taking areas. I just want to get a ballpark figure of what's possible. So looking within cycle wave 1, I've double checked my calculations, and they're slightly different from last time I showed you this chart because the data is different. I've moved from Yahoo Finance data to Crypto Compare data. I don't like Crypto Compare data. It's a bit glitchy sometimes, but it is what it is. So this is what it is. Within primary wave 3, intermediate wave 5 was 7.93 times the length of intermediate 3, not a Fibonacci ratio. Primary 3 was 19.13 times the length of primary 1, not a Fibonacci ratio. Primary 5 to end cycle 1 was 195.39, longer than 2.618 the length of primary 3. That is a Fibonacci ratio. So for these numbers, unless I state it's not a Fibonacci ratio, then it is a Fibonacci ratio. And if you know your Fibonacci, you're going to recognize it anyway. So the takeaway here is primary 3 was a lot longer than primary 1. 19.13 the length. That's a really extremely extended wave. You don't see that normally in most normal markets, not even commodities with their higher volatility. You hardly ever see this in Forex, but you do see it repeatedly in crypto. The second takeaway is primary wave 5 is even longer than primary wave 3, and it managed to travel a greater distance in terms of price and potential profit in a fraction of the amount of time. It did it in 2 months, whereas primary 3 took 5 months. So this is where the profit is going to be found. The fifth wave, especially a fifth wave to end a third wave 1 degree higher. Here's another example. This is a third wave at intermediate degree. Within it, minor wave 3 is 82.65 longer than 4.236 the length of minor wave 1. Not as extended as they usually are, but a pretty good extension. Minor 5 is 194 longer than 1.618 the length of minor 3. Minor 3 travelled this distance in 4 months. Minor 5 managed to do it in just 2 months. This is a fifth wave to end a third wave 1 degree higher. It is the strongest, most vertical upward movement, travels the greatest distance in the shortest amount of time. This is where your profit is going to be. So pay attention to that idea. This is where the profit is going to be. Primary 5 of cycle 3. That's what I'm looking for. My numbers here for cycle 3 I don't have a lot of confidence in. I think the best way to get an idea of where cycle 3 might end is using the ratio between primary waves 1, 3 and 5, and I can't do that until primary 4 is over and I know exactly where primary 5 begins. That seems rather obvious. I don't have confidence in these numbers. A little bit more confidence in these numbers, but not a lot. Ideas of where primary 3 might end. I'm going to use the extreme Fibonacci of 11.09 to be a bit more conservative for this market, and this might be fairly realistic, 54,214. If primary 3 exhibits the same relationship to primary 1 that intermediate 3 did to intermediate 1 within primary 1, 15.28, then 74,363. If primary 3 exhibits the same relationship that primary 1 did to primary 3 and primary 1 within cycle wave 1 exhibited, then 92,877. So the first idea is a Fibonacci ratio, which I think is fairly realistic for Ethereum, and the second ideas are based on past behavior with this full Elliott wave count. Within primary 3, no second wave correction may move beyond its start below 883.48. Before we go to the weekly chart, the last thing I really want to point out on this chart is consider the middle of this third wave, the middle of primary 3. Primary 3 must move beyond the end of primary 1. It has to move above 4891.7, and it has to move far enough above the end of that point to then allow primary 4 to unfold and not move into primary 1 price territory. I'll expect primary 4 to be over in anywhere from 3 to 6 or 2 to 6 months. I would expect primary 4 to be more brief in terms of duration than primary 2, and I'd expect it to be maybe close to the log function of the 0.618 Fibonacci of primary 3. It'll technically be a bear market, but I don't expect it's going to take that long. And then I expect primary 5 is going to travel the greatest distance in the shortest amount of time. I expect it to be much more brief than primary 3 and travelling many multiples of primary 3, at least 2.618 if not more. The middle of primary 3 has not yet passed. I do not want to label the middle of it over here. The slope is not steep enough, the range is not great enough, and it hasn't moved beyond the end of primary 1. Looking back at these third waves, the middle of primary 3 is over here. After it makes new highs beyond the end of primary 1, energy is released to the upside, volume increases, range increases, volatility absolutely explodes, particularly at the end of primary 3. Look at the impulse within primary wave 1. The middle of intermediate 3 is here. Once it makes new highs beyond the end of 1, volatility increases, energy is released, volume and volatility expand to the upside. We see it again here, intermediate wave 3, the middle of it doesn't happen until after it's moved beyond the end of 1. So the takeaway for that is wait for the middle of primary 3 to unfold after we've made new all-time highs. Once it's moved beyond the end of 1, then energy is released to the upside. Volume should show a strong increase. Volatility should explode, especially at the end of primary 3 and even more so at the end of primary 5 to end cycle 3 1 degree higher. Looking on the weekly chart, we're looking at the start, the detail of primary wave 3. I'm adding in some numbers for intermediate wave 3. I've used the same numbers as I used for primary 3. 11.09 gives us a target, or a ballpark figure, not a target, 13,651. 15.28 gives us 18,403, and 19.13 gives us 22,769. Rather a wide range. I'll try and narrow in on some kind of actual target at minor degree, and then within minor 5 at minute degree once it's unfolding. Primary 3 may have begun with intermediate 1, an impulse, intermediate 2, a deep double zigzag, intermediate 1 lasting 8 weeks, intermediate 2 lasting 14 weeks, so really long lasting. When it arrives, I'll expect intermediate 4 to be relatively brief and more shallow than intermediate 2. Intermediate 2 is a 77.9% of intermediate 1, that's the log function though, 84.3 on an arithmetic scale. Intermediate 3 may only subdivide as an impulse, and that'll be labelled minor 1, 2, 3, 4, 5. Anyone really paying really strong attention to what I'm doing here may have realised that minor wave 2 lasting 25 weeks is longer than intermediate 2 lasting 14 weeks. That is not a problem when you start to have an extended third wave. The absolute fact of the matter is that this correction begins at this candlestick and ends at this candlestick, and it does last 25 weeks, and it came after this correction, which began here and ended here, that lasted 14 weeks. There's just no way you can make this correction more brief than this correction. It is a correction, and it happened after, and we can be really confident it was a counter trend movement because the trend has moved beyond the end of this point now, and it's continuing up. So that is the fact of the matter. That's how the market has behaved. It's not a problem that this lower degree correction has lasted longer than this higher degree correction in the same wave position, and this is why. Imagine, if you will, an accordion squished up, compressed for storage. You can't see the folds of the accordion, and it's taking up less space. If you open that accordion up and you extend it out, now you can see the folds within it, and it's taking up a lot more space. The folds within it are taking up more space than the folds when it's compressed. This is like the compressed accordion. Intermediate wave 1 is not extended. This is the accordion expanded. Intermediate 3 is extending. As we expand it out, we extend it, we open up those folds, and you can see lower degree corrections at a higher time frame, and they take up more time. That is exactly what happens when waves extend. It is extremely likely that all of these third waves nested within each other like a series of Russian dolls, they're all going to be extended, all of them, right down to minuet and subminuet degree. So I'm expecting those lower degrees to show up at this higher time frame. So primary 3 very likely to be extending, intermediate 3 likely to extend, minor 3 likely to extend, minute 3 likely to extend. I don't think we're going to see the middle of minute 3 until Ethereum has made a new all-time high. And so now moving into minor 3, minute 1 and 2 complete. So now the wave count sees a third wave at 1, 2, 3, 4, 5 large degrees. This is an extremely bullish wave count. Within minor 3, if this isn't minute 1 and 2, if I have to move these up and say minute 2 is yet to arrive, then minute 2 may not move beyond the start of 1 below 1521.78, but I think it's most likely to be over there. So a very, very bullish wave count. I've drawn a base channel around intermediate 1 and 2 from the start of 1 to the end of 2 with a copy on 1. Use the lower edge for support for any deeper corrections along the way up. Little overshoots here for minor 2, not a problem. Price quickly moved back within it and didn't print a full weekly candlestick below and not touching the lower edge, which is my conservative definition of a breach. So this is an overshoot, not a breach. So support down here, but I don't think we're going to see price get anywhere near that point now. I think we're going to see energy start to gather and then be released to the upside and explode as soon as it makes new all-time high. Let's go to the daily chart now, the end of minute 2. This point here, here's minute 1, minute 2, subdividing as a double combination, zigzag for minuet W, X, flat correction for minuet Y. The whole thing moves sideways, takes up time. That's a normal look for a double combination. From this low to this high, I'm going to label this another complete 5-wave impulse. 1, 2, 3, 4, 5. 4 is more brief and shallow than 2. Normal behavior for cryptocurrencies. And if you doubt my statement there, I have a really in-depth video on exactly what I mean by fourth waves more brief and shallow. And if you want to ask the question, I'll give you the link in comments below. But I did it reasonably recently. So this looks really normal for a cryptocurrency impulse. I should probably check this on the hourly chart actually. If this low came after this high, which it probably did, then this is probably the end of A. And then now let's get some labels in here. We've got this nice looking little zigzag for B. So it'll be A, B, C, yeah, and C's move beyond the of Oh yeah, nice looking zigzag. So I expect C to move below the end of A, which is probably at 2455.87, the low of 12th of January. As soon as we get that, it could be over. I think this might end midway within the channel, not at the lower edge, but what I'm going to use this channel for is confirmation that this correction pullback is over and the next move up is underway. Now I'm tentatively labeling it sub-minuet 1 and 2, but I might move the degree of labeling here up 1 degree. This could be minuet 1 and minuet 2, so the green labels. This labeling still has minuet 1 and 2 to complete, and 2 to arrive. Subminuet 2 may not move beyond the start of 1 below 2092.33. At this time frame, I'm just going to go with this Fibonacci ratio of 11.09 for my, not targets, ballpark figures of where these third waves might end. So minute 3 might be 11.868, minor 3 might be 13.325. Quickly going through technicals today for Ethereum, a small range session moving a little bit lower. That's what the Elliott Wave count expects. I think we might find support at 2,400. This is really strong. Again, that technical principle. The more often support or resistance is tested, tested and holds, the stronger it becomes. So 2,400 was tested multiple times in here, price broke above it on an upward session with really good push from volume, and now it may come down to test support before moving up and away. That'd be really normal, expected behavior for price, and that's exactly what the Elliott Wave count expects. The moving average situation is full bore bullish. The short is above the mid, which is above the long. This is the 50-day, the 200-day. Back off to the left of the chart, we have a golden cross. Usually good things happen, more likely than not, after a golden cross. This is a full bore bullish look. The upward session that broke above resistance had the strongest volume we've seen since November 2022. So zooming out, this is how strong that volume was. The last upward, it's even stronger than November 2022. You have to go all the way back to the early November 2022, the end of that bear market where it ended with that selling climax, in order to see stronger volume. So I cannot emphasize enough how strong this volume supports the Elliott Wave count. ADX at the daily time frame has given us the strongest bullish signal it can give. It's come up from below 15, although only just, so it could be a stronger signal if it rose from really low levels, but this is pretty strong from below 15, rising up from below both DX lines, has a positive slope, is above 15, positive DX line is above the negative. ADX is telling us Ethereum is in an upward trend in an early stage. This is extremely bullish and strongly supports the Elliott Wave count. RSI has double bearish divergence. I'm not going to give this too much weight given the Elliott Wave count and some bullishness I see from volume. This could be relieved by just some sideways movement, and RSI can reach deeply overbought and remain so for a long period of time when this market has a bullish run. And finally, the last piece of evidence that leads me to expect Ethereum is in a new bullish run to new all-time highs and well beyond is this behavior, which has come after the June 2022 low. So the low of June 2022 is off to the left of the chart. We had a strong upward movement, a deep pullback, and then price started to rise again. And this behavior in here that we see is parabolic growth. I've gone over this again extensively in an educational video. I see parabolic growth, and I looked at it in detail for Bitcoin. I've done some looking at it for Ethereum, and I had a good look at it for XRP as well. I see parabolic growth in bullish runs. I don't see it very clearly in bear market rallies. So when you see parabolic growth that looks as perfect as this curve does here, that's almost like a stamp telling us this is a bull run and not a bear market rally. That's one of the big things that you can use to differentiate the two situations. And so this gives me reasonable confidence in my Elliott Wave count for Ethereum. Quick update for XRP. It's moving a little bit lower today, so I'm going to get rid of this. I don't like this part of the wave count. I think we might be seeing an expanded flat unfolding for Minuet Wave 2. So I'm going to get those labels in there. Or it could be a combination. We could have WXY, but see if this is an expanded flat, it has to be a 5-wave impulse or an ending diagonal. So I expect we need 3, a little 4th wave and a 5th wave. So I think XRP might have another little pullback to test support about 55 cents. I expect we might see a wick below the low of the 8th of January, which was 0.5453. So I think the 54-55 cent range is going to be tested quite strongly again. We might even see a close below it, and then a little bit of dithering around before it turns on back up. But overall, my analysis for XRP as well is very bullish. As price is moving lower and sideways, volume is pretty relatively light and today declining. On balance, volume gives us a weak bearish signal. This supports the view that we're going to get lower lows for the very short term for XRP. I expect, though, this is again a pullback within an ongoing upward trend, not the start of a new downward trend. ADX is flat to declining today, so no clear trend indicator. Won't take much to turn ADX back up and indicate again a downward trend. And for XRP, ADX gave us a really strong bearish signal back here in January. It came from relatively low levels below both DX lines, rose up, reached above 15, the negative DX lines above the positive here. It told us there's a downward trend. That's it from me with your analysis today, and I hope everyone's having a lovely day. And if I get the time today, I'll be updating my Cardano analysis for you. That was the next one you all voted for, and then I'm going to run a new vote for extra free analysis next week. And don't forget, I'm putting my Elliott Wave Learn Pure Elliott Wave online course on sale for a fortnight next week, a 48-hour sale. I'll announce it here on this channel. If you don't want to miss out, make sure you're subscribed.